you. I'm going to give the talk in English, so I hope that's going to work. And if you don't speak English, then hopefully the video recording will be useful and we can do some translations after. So thank you all for coming here today. Tokyo is one of my most favorite cities in the world. I don't need much of an excuse to come visit here. After the Satoshi Vision event that was on the other day, I was wandering home, and isn't it amazing to see billboards with Bitcoin all around, and never, it was something that we could never even imagine. I mean, we imagined it would happen, but when you actually see it, it's an incredible thing to see. So Tokyo has a very rich history, as you all know. And I'm sure you've been involved in the community for a long time, and this is one of the most buoyant communities in the world. So it's always a pleasure to come here. What I'd like to do today is I'd like to present a little bit on the Bank to the Future project, but I'd like to do it in context of some of the history. And then I'd like to, once I go through the project and some of the things we've been involved with, I'd like to go through some future predictions and forecasts for this industry, which I think will lead very nicely into Roger, who has kindly agreed to come here tonight and debate one of the most hot topics, I guess, of our industry and of our sector right now. And we'd like to give some different perspectives and discuss that and some of the issues that I think our industry really needs to deal with as we move forward. So for me, it all began in 2006. This was me working at an investment bank. I was a market maker on the London Stock Exchange, and my job was to manipulate London Stock Exchange stocks up and down and try and get people to buy in and buy out and scalp my little piece out of the market. Prior to that, I was a stockbroker, and then I decided, after spending a couple of years trading the markets, that there must be something more fulfilling than just trying to take my little piece out of the market and make the investment bank richer and richer. And I decided that I wanted to learn the business side, so I worked in corporate finance after that. And in corporate finance, my job was to take entrepreneurs that are at the very, towards the end of their journey, and help them go public on the London Stock Exchange through this strange little thing that some of you might remember that used to be called an IPO. I don't know if anyone remember those things. At this time, I did that for a while, took a few companies public as part of the team. And I decided in 2006 that it was time to throw the corporate towel in. I wanted to return to, I did a master's in economics at the University of Manchester, and throughout my whole master's I completely disagreed with some of the models that we actually use to model our entire economy, our entire financial system, and the world as we operate today. And one of the things that I really disagreed with was the model that we were being taught about money. I was being taught originally in the economics textbooks, right in the first year economics, that banks are an intermediary between borrower and lender. It turns out that they're not really an intermediary between borrower and lender. They're a lender with a license to be able to lend money that doesn't actually exist. And now it's reached the point where they don't even really need your deposit, depending on what type of bank it is. And it's not, your grandmother's savings being lent to somebody. So I question that. And then the next thing they taught me was, it got a little bit more advanced, and they taught you this thing about a multiplier effect, this thing called a money multiplier. And then when you dig a little bit deeper, you find out about this term called fractional reserve banking. And essentially the theory is that the central banks don't actually create money. They create these things that sit in our pocket called notes and coins. But digital money, digital currency, was originally invented by banks. We think of Bitcoin as one of the first digital currencies. Well, Bitcoin was one of the first decentralized digital currencies, but way before that, banks were actually given the ability to take the money that your government was creating and create a digital version of it. And it sits inside your online banking. If you log into your online banking, then that money is actually created by a bank. It's a digital currency. It's not backed by anything. It's just a digital representation of the paper and coins that actually the government and the central bank do create. And so I got really, really geeky in 2006 and got so obsessed with this subject that I decided to quit my job, and I did a load of blogs and wrote full time on it, and wrote a series of articles that became the precursor for my first published book called Bank to the Future. This is my wife, Bliss Dixon. She's in the audience. Where are you, Bliss? She's here somewhere, hiding right now. But I got so obsessed with the subject that we actually sat outside the Westminster Parliament during the G20 riots with a little sign on our heads with literally my telephone number, asking anyone to call me so that we could discuss money creation and its role in what I was believing would be a very systemic risk event in our financial system. But it took, at that point, nobody would listen. No one was interested. I was reading papers on the, different papers on the Bank Charter Acts of 1600s and when the Bank of England was formed and all these other papers, and it was a really boring and academic subject. But then in 2008, people actually started to turn up to my talks, and people actually started to get interested in this subject, because the entire financial system almost imploded globally. And suddenly money became an interesting subject. We were told that it was very different things, but I believe that the foundation of all of these troubles was that we were operating on an incorrect assumption about how money is created. For example, the models in economics assume that we work off a fractional reserve banking system. Now, most people, when they hear about fractional reserve, at this time, that word was, people didn't even believe me if I said that banks have more money than they have on deposit. It was something I had to really persuade people at the time. And it was a very controversial subject, and spent most of my time just trying to persuade people how the banking system works, because people just didn't actually believe it. But then more and more people would come along, and it turned out when I really looked into the financial system that even fractional reserve doesn't even exist. There is no fraction and there is no reserve. The reserve consists of money that's created through this financial engineering, and you used to have to keep cash, cold hard cash on reserve, or gold, but then that became something that you could loophole. And then there was no fraction because the retail bank was required to hold a certain fraction of the reserves, but then they invested and created investment banks that would use financial engineering in order to loophole all those reserve requirements and leverage 300 to 400 times over. And so there was a way to get around both the reserve and both the fraction. And so therefore, it's even worse than fractional reserve banking, once you even understand that. In countries like the UK, there isn't even that type of requirement. In the US, that's a US term, and in other countries, we dug deeper and deeper and deeper. And so round about when the financial crisis happened, this became a very popular topic, and I toured about 200 different universities and colleges on the subject of monetary reform and banking reform. And then I did this little documentary. This is called 97% Owned. It was a documentary that was created in order to explain to people that we only have about 3% of money that's created by governments, and 97% of it is created by the private banking sector, and all that money that's created by the private banking sector is actually backed by debt, and therefore you have to have more debt in order to have an economy. And so you enter this cycle, this boom-bust cycle, where you're continually trying to push up interest rates when the economy gets too heated so that people don't borrow so much. And then you push them down to try and encourage people to borrow. And then when the economy gets too heated, you send the same people that borrowed the money bankrupt by pushing the interest rates up to cool down the economy. Boom, bust, boom, bust, boom, bust. And then this little documentary that we thought was like going to have known, I just looked it up on YouTube, and we're now at 1.9 million views on this documentary, which is fascinating. So this is around 2009. At this point, I had not heard of this group of people or this person called Satoshi Nakamoto, but I happened to speak at. I decided at this time to publish a formal published version of the series of papers that I put together called Bank to the Future. And in doing that, this Bank to the Future book, the ones prior to that were very, very boring and academic and went through the history of money and things that most people don't care about. But one day I woke up in the middle of the night and Bliss, my wife, was woken up in a panic because I came up with this idea of Bank to the Future. And for those of you that haven't watched the film Back to the Future, I hope you all have, when I go and speak about this in China, it's lost on everybody because nobody's heard of the film Back to the Future. The funny thing is, my book has sold over 1 million times more copies in China, and I don't think they get what the title means either. But the purpose of the book was to describe this journey in time travel where we go through all the different crises over time. And we stole this, I don't know if you remember the film Back to the Future, where they have this sports almanac and they give it to him former self, and then he starts making bets based upon knowing the future. Well, we did the same with the banking almanac, and we kept giving it to these different people based upon these different innovations in financial technology. And I gave this whole journey and forecast about what was going to happen. But in the research of writing on this book, I was introduced, this person contacted me on Facebook. And his name was Johnny Bitcoin. His real name was Jonathan James Harrison. And he sent me this message, I still have it on Facebook. And he was telling me, Simon, I've sold my house. I've moved into a squat in London, and I'm working with this group of developers on this thing called Bitcoin. And I thought that was a little bit crazy, but because I was writing a book, I decided to really look into this thing called Bitcoin, because he was telling me about this peer-to-peer payment system. At the time, we were talking in the book, it was like about PayPal and all these other things that were coming along. There was no WeChat Pay at that time, but I was looking into all this technology. And so we launched the book, and I believe that this book was the very first published book in the world that included the topic of Bitcoin once it was published the next year. And so here's 2011, and I spoke at Occupy London, and this is where I started to meet a few more of the very early Bitcoin community people. And I believe it was round about, as Roger's here today, and we're going to be doing the debate later, it was round about February 2011 that I believe Roger got into this and started evangelizing and investing in the industry. Maybe he'll correct me if I'm wrong later. But this was the very first Bitcoin conference in Prague in November 2011. And myself and Max Kaiser were speaking and hosting. There was this little startup pitching there, a gentleman called Tony Galippi that was pitching a little company called BitPay at the time. It was sponsored by this exchange that some of you might know called Mt. Gox. And the price of Bitcoin, I think it had crashed to around about $3 during this conference. And it was really around about 40 people in the room. I'd say 20 of them were hardcore computer scientists. The other 20 were anarchists and activists that wanted to take down governments and believed that this technology was going to change the world. And they were true visionaries, all of them. Hardly any of them could communicate. The presentations were barely understandable. But Bliss and myself left that day thinking that this room is full of a people that seems like they're actually going to change the world. Bliss was a bigger believer than me. I was looking more at it in terms of writing the book. But my wife had the vision to believe that this is something that we should really be looking into. At that time, we founded a company in the UK in 2010 called, we used the title of the book, and it was called Bank to the Future. Now, when we registered the company, we were actually told that we needed to apply to use the name bank in our name, because it's actually a word that's protected by governments. And when you use the word bank, you're told that you actually have to have a banking license in order to do it. So because we'd already gone so far, we decided to take the A out of our name, and we pledged that day that one day we will get our A back and we will be Bank to the Future again. But then we started to realize, as we looked more and more into Bitcoin, that actually a world without banks was being created. And then we got really comfortable with the brand, and we didn't want the A back because we no longer wanted to be a bank. At the time, we were trying to create a non-fractional reserve bank because we were fed up of telling the governments what the future of banking would look like. And so instead, we were trying to show them, and it turned out, I remember we met with the regulators. Firstly, they told us that you can't have your name. And secondly, they told us, you're not the type of people that we would regulate or run a bank. You're going to have to go and find an executive from a bank in order to run this company. So what we decided to do is we were hanging around with a few people, and we set about trying to build a platform whereby people could invest in anything that was going to disrupt the banking system. And so the book Bank to the Future gave a whole forecast about this change, how technology was going to have an impact on the future of finance. We wanted to create a bank, but instead we decided to create a platform where we could invest and diversify in all of the different things that were going to change the banking system forever. The problem was, we managed to secure our, it was a group of us, about 3 different companies at the time, and we were the very first group of companies in the world to persuade a regulator to allow people to invest online to try and disrupt the venture capital industry. About 3 years after we persuaded the very first regulator, the FSA in the UK at the time, it's now called the I forget now, haven't been to UK and regulators for a while, but we managed to persuade them, and it was the very first company that allowed people to invest online. Now the problem was that we were only allowed to work with UK businesses and UK investors. And they put together a special legislation that allowed for this investing online. I believe this was the precursor to ICOs. 3 years later, America copied the work that we were doing and created this thing called the Jobs Act. And for about 3 years, trying to change the laws to allow people to invest smaller sums online and pooled. Then in 2012, all of a sudden, people were actually really interested in this thing. And Max Kaiser invited me on the Kaiser Report, and all these TV shows were interested all of a sudden in this subject. And because we were getting really pushing forward for this thing that was called equity crowdfunding at the time, we spent 4 years just trying to get a license so that we could allow people to invest online. And so this whole process continued and continued. In 2013, we were invited on TEDx, where I gave a talk on just changing the rules in banking. And that was the very first talk, I believe, on this subject on TED. And then in 2014, I gave a model for what I thought the future of fundraising would look like. And I believe this was the time that I gave the first forecast that this little thing that had come along called ICOs, the first one was something called Mastercoin, was going to be bigger than the IPO market, and I called that on TEDx. You can still look through the archives and see that video. And at this point in 2015, we got fed up of, now, if you think about it, we were getting, the Bitcoin industry was getting bigger and bigger and bigger. We had all the scandals, we had the Mt. Gox, we had the bear market. At this point, round about 2015, we'd had a really, really long bear market where nothing was really happening in the industry, but lots of people were building and building and building. And we decided at this point that we were going to dedicate the entire platform just to supporting the Bitcoin industry. The problem was that there were hardly any businesses. Roger had invested in all of them. Roger was supporting, he was doing the seed rounds in many of these companies. And because the regulators would only allow us to have UK businesses and UK companies, this was a time when no one was really interested in investing. So let alone could you find a UK company that wanted to work with Bitcoin, then you had to try and find the investors, and you were just restricted to the UK. And in the meantime, this thing called Bitcoin had come along, which was completely global, did not care where anyone was from, did not care about anyone's ethnic minority, country, anything. And we were trying to do this, and plug it into a system. So we decided at this point to move to Hong Kong, reincorporate the company in the Cayman Islands. We deregistered with the regulator there, and we registered with the Cayman Islands Monetary Authority as a securities business. And from that moment, the business exploded. Here's some of the companies that we managed to do the early funding rounds for. Some of the exchanges like Bitfinex, BitPay, Kraken, Bitstamp, BitPayzer, Shapeshift, Bitso, largest exchange in Mexico, UnoCoin, CoinSecure, and over 100 different companies in the industry. Now at this time, it was very, very hard to get equity. It was very hard to raise finance for these companies. There were only so many investors out there. They were very skeptical about the Bitcoin industry. And we were very fortunate to get equity in these companies in a time when you could actually get the equity. Nowadays, if you try and get equity in a company in the Bitcoin or blockchain industry, firstly, the companies are just not interested in selling it because there's this thing called tokens that's come along. And then the investors are barely interested in investing in it because there's no liquidity and they can't sell it. And I'm sure Roger has still got all those positions that he originally invested in those early days because the liquidity is just not there. But we built this portfolio and we were supporting the industry and we had several, let me go back. And in this, in the meantime, forward a couple of years and several of these are unicorns. Every bank in the world is trying to buy all these companies. They're getting mergers and acquisition deals knocked on them every day. Venture capitalists are queuing outside the door to try and invest in these companies, and they're just ignoring their emails. Because after 2016, we created a self-funding mechanism whereby our industry no longer needed to beg to venture capitalists. And it no longer needed to try and persuade people that this was an industry that they should be looking at. And in 2017, we had the biggest bull market that we experienced in cryptocurrencies as a result of people being able to create tokens. And you say what you want about these tokens. You can say what you want about whether they're scammy or whether they're good or whether they're ripping people off. But one thing it did is it actually created a self-funding mechanism whereby our industry could raise the capital that it needed in an environment of rapid innovation. That allowed it to it became a self-fulfilling prophecy where we were able to fund ourselves, develop, create new innovation, global, bring new people in, have a load of people all around the world with no borders. So at this time, the equity markets was being completely disrupted. Tokens were raising more than the IPOs that were going on the markets. We decided at BnkToTheFuture to launch our token sale right at the end of in this year. And I remember those early days. Bliss and I will tell you, we were begging people just to raise that $250,000, and we had to do 6 months worth of meetings trying to explain the vision of what we were doing, which was completely demoralizing to people that really didn't care about what we wanted to do. And then they ended up just giving us the money because they got a tax break by investing in us. Not the type of passionate investors that you want in your company, but they're very happy now with the value of the company. But we launched our token, we did a private sale for accredited investors. We wanted to show that this could be done in a compliant way. We registered with the SEC. We wanted to show that there was a way of doing this. We had to, although we're very happy investing in all the decentralization and the disruption, but at the end of the day, if you're not doing this decentralized and you're a person, then you're going to have to follow some of these laws if you still want to be here and see some of these changes. So we launched the BF token, and it was designed to solve a few problems for us. The first one was deals on our platform were getting more and more popular. Right now, you won't see any deals listed on our platform because every time we launch them, they just sell out straight away. And so we decided that we use the token in order to create some membership whereby those who had the tokens were able to get priority access to the deals if they were a qualified investor. We've integrated with different financial securities laws all around the world. And the other thing we wanted to do is we went from knowing every single deal where there would be one deal every 4 months, and we'd be trying to get in that deal every 4 months or so, to getting 50 applications a day. We thought we were in a niche here. Last year it went from a few deals to 30 applications a day to 50 applications a day. Our team could even handle that. They don't know what to do with that. So we decided to create the token in order to reward people to help us with the due diligence process, vote on what should be listed on the platform, and try and create some more of a decentralized community in what is a regulated centralized model. And then we were decided that we'd had enough of the tokens. Many people were purchasing these tokens, and the only reason they were purchasing them is simply because they were traded on a market. They thought they were buying stock in the company, they thought they were buying something, but it turns out they won't. So what we wanted to do is launch an exchange that essentially makes these things the actual securities so that people can have the best of both worlds. Shareholder rights at the same time as some of the liquidity of these tokens. So we're putting together a model, and in 2018, this is some of the coverage that we got, we did that, and we wanted to show that there is a fully compliant way of doing this if you need to and follow securities law. So that kind of brings us to where we are today. It's been an amazing journey. This was us covered in Bloomberg, whereas we're looking to launch our secondary market for tokenized securities that we're looking to launch and bring that to market later this year. So I now want to go through some of the 29 predictions and forecasts, 2019 and beyond. This little slide was something that I gave at the Token 2049 conference in Hong Kong. And I believe that we're going to see much like we see in Bitcoin today. In Bitcoin today, we have two completely booming markets. One market is the decentralized hardware wallet to hardware wallet. When I wrote that book in Bank to the Future, the very first draft, I still give the same talk today to help people understand the difference between Bitcoin and banking. And the reason that I got in is because of these 3 points, and still to the same today. The first thing is when you deposit your money at a bank, the bank becomes the legal owner of your money. You think it's your money, they promise to repay you, but if they do too risky things with that money, you soon start to realize it's not yours. If you spend that money in a way that they don't like, you soon start to realize that that money is not yours. If you fly to the wrong country, you soon start to realize that that's not yours. And when you start to send a few $1 million or a few million of any currency around the world, you soon start to realize that you need to explain everything you're doing, and you realize that they actually can take that money, seize that money, because it is legally their money. The second you receive those wages in a bank, it is their money. Now, when I spoke at that conference in 2011, what I realized was that Bitcoin was the first digital scarce good that you can own, and it existed on the internet and was scarce. And so that was essentially it gives you the ability to own your own money. So this is what's very, very attractive to me. The second thing about Bitcoin and banking, because banks own your money that you think is yours, and it's a digital currency that's created by the private banking sector, that was not created by the government, it's created by the private banking sector, essentially they spend your money for you. And this is what dictates the business cycles. The way that banks spend your money determines whether your economy is going to boom or bust. Now, central banks and governments try and influence how the money is actually spent through regulations and various things, but what always happens is banks always opt for the lowest risk, highest return way of spending your money. And the lowest risk, highest return way to spend your money that you think is yours is always lending for property. And it's why the property markets continually go up in price with little dips, and they double in price every 7 years over time, depending on the market you're in, is nothing to do with property, nothing to do with economics, purely because all of your digital currency that you thought was yours is being used as collateral in order to lend for property, because it is the lowest risk, highest return way to use the money that you thought was yours. With Bitcoin, it had a peer-to-peer payment system attached to it where you could send it to anyone. Because you can own it, you can take it from your pocket that you own, not put it on an exchange, which means, remember, if you use an exchange, if you use the Mt. Gox lesson, it means that it's just like banking at that point. If you hold it at an exchange, it is not your Bitcoin. It has to be you that owns it, and it gives you the ability to own it. And so because you can own it, you can send it to anyone else that wants that has a wallet that's allowed to own it. And so in summary, with bank deposits, the bank owns that money. With Bitcoin, you own that money. With bank deposits, the bank spend that money, and when you try and spend it, if you spend it in the wrong way, they tell you why you can't. With Bitcoin, you spend it in any way that you want to anyone that's willing to accept it. And then the third thing, which I think leads kind of into the debate that I think that Roger and us will have about the future of Bitcoin from here, is the monetary policy. So with banking, as I said earlier, as I alluded to, the monetary policy of the country is determined, you could either put it into two schools of thought. One school of thought is that a country has to maximize employment, and maximize the goals of the country and inflation and deflation, and they create these economic models based upon a science that has never been confirmed, where they all debate between the Keynesian, the classic, the Austrian, and all these different schools of thought, and no one has reached consensus on what this model is, and yet we use it to model all of our economies all around the world that affects all of our lives. And essentially, they use these models in order to try and manipulate interest rates and pushing up and down interest rates so that they can try and control the digital currency supply that the banks create. Every time you take a mortgage, every time you borrow that money, every time you do anything that interacts with the banking system, if you log into your online banking right now, if you have a positive balance, it's because somebody else has a negative balance. That positive balance cannot exist unless someone else has a negative balance. This means that it's a constant war around who's going to get the positive balance versus who's going to have the negative balance. And because property prices are taking more and more and more of your income every single month, because they're using the money that you thought was yours, in order to push up those prices, it creates a ginormous rich-poor divide where more and more assets are going to move from this side over to that side. And this was the trends that I was talking about in the book. And so the monetary policy is simply the following. The money supply of any country is simply a function of the bank's risk and appetite to lend. The money supply is simply a function of the bank's appetite to lend. And in order to lend more, when central banks are trying to control the money supply by changing how much digital currency the banks actually create, they tend to push up bank interest rates up and down and try and have a say in that process. And then the governments create financial engineering every time it goes wrong, quantitative easing, another invention that was invented here in Japan. Or the retail banks use investment banking in order to create a new product, in order to innovate a new way of lending more money so that you can enter a new boom cycle. But eventually, this financial engineering has to come to a pinnacle. And that financial engineering, I believe now, comes and interacts with digital currencies. And so let me explain that. So at the moment, you have two markets in Bitcoin. You have the people that understand they can own their own money, spend their own money, and then they understand the monetary policy of Bitcoin. For those of you that don't understand the economics of Bitcoin, it has a fixed supply. There's never going to be more than 21 million of them. And as long as Bitcoin becomes more and more useful, those 21 million Bitcoins, people are always going to fight in order to accumulate them. In times of fear, they sell them, it pushes the price down. In times of greed, they buy them, it pushes the price up. And the more and more user cases, the more and more useful Bitcoin can become, the more that you get this the demand, and it only comes out in the price. The economics are as follows. Every 4 years, every 10 minutes, newly Bitcoins are created. It's a reward for people that are verifying all the transactions, that are performing the role of Visa or MasterCard and verifying all those transactions. And every 4 years, the number of Bitcoins that are created every 10 minutes half, until eventually you reach the full money supply. That number 21 million is a number that will never change unless the network reaches consensus that it should change, but I don't think that's something that's ever going to happen. But then again, Bitcoin never surprises me. This was kind of one of the fears. I'm jumping around a little bit, but one of my fears around the debate that the hard fork debates that we're about to have was, if you can have more than one Bitcoin, do you now have 42 million Bitcoins? And if you have 42 million Bitcoins, does that mean the monetary supply can change, and therefore does that change the economics? That was my number one fear, because I'd spent the last few years telling people that money supply would never change. And that was my entire thesis of how you attract people outside of the banking system to one step at a time, own their own money, spend their own money, and have a sound monetary policy, whereby as long as Bitcoin becomes more useful, the value is going to be going up over time if you can take out the volatility in between. So Bitcoin has two markets. It has the decentralized market and it has the regulated market. Both are booming. Here's why. Every single fund manager in the world, whether they believe in Bitcoin or not, needs to have Bitcoin in their portfolio because it is an uncorrelated asset. And so the fund managers that are going to be trying to compete for those Bitcoins, once they realize this and understand the economics of Bitcoin, are going to be sucking Bitcoins out of the supply because they're going to be long-term holding as an uncorrelated asset. One of the theses of why this actually went up to 20 million is because this was actually the first thing that the banks and the financial institutions suddenly started to realize the economics, that it wasn't a Ponzi scheme, that it wasn't the things that they thought it was. And therefore the retail people were able to get it before Wall Street. And then Wall Street are waiting for the regulations before they come in. And then when they're waiting for the regulations, you've got all these people that are trying to turn Bitcoin into banking, where you can't own your own money, where you can't spend it as you wish, and that there is no, and so that they're essentially trying to take this thing that you can own and spend and make it into something that has counterparty risk so that you can charge fees on it. But guess what? So many people in the world are waiting for counterparty risk so that someone can lose their Bitcoins for them. But the regulated markets will boom. And so that's why all of the exchanges that we invested in, they had record levels of people signing up, hedge funds signing up, people signing up, speculators signing up, people signing up. And so you have this booming regulated market. You will have decentralized tokens and you have decentralized exchanges. You will have regulated ICOs and you have regulated exchanges, and both of those will boom as people adjust to this asset class. One of the things I'm really excited about is Bitcoin becoming the world reserve cryptocurrency for not just cryptocurrencies but assets as well. So at the moment, if you want to, Bitcoin is essentially most exchanges. They don't normally. What they do is there's a few exchanges which bring in traditional fiat money. That money tends to come in, and then it tends to stay in crypto. It doesn't tend to go out of crypto. And so the size of the market cap of the entire industry, over time, each year tends to increase because the friction of trying to get that fiat money in, and then it tends not to exit there, it tends to slosh around in different cryptos. And then because there's fiat-backed cryptos as well, people tend to leave it in fiat-backed cryptos in times when they want less volatility, or in times when they want volatility, they tend to take it out to the actual underlying, depending on their time frame. But the other thing that I think we're seeing is, so once Bitcoin has now become the world reserve currency of cryptocurrencies. So most people flee to Bitcoin in times when they're looking for safety. There is a contender for that. I guess Ethereum came along because it was taking, because all of these tokens were built upon Ethereum. But they tend to be traded for those. But now, every single asset class in the world is now looking at how it can be tokenized. While some people might think that the ICO bubble market is over now, it's only just getting started. Every single asset in the world is now going to be tokenized. Now, the interesting thing about tokenization is that it actually means that everything's traded against a cryptocurrency as well as traditional fiat, because the traditional fiat cannot keep up with it fast enough. It's why all of the exchanges, the ones that don't have the fiat, still exist, because they use a crypto-backed, they use a fiat-backed crypto in order to gain a price. But it looks like there's a potential, and one of the things that I want to make sure happens is that Bitcoin can be the world reserve currency of all assets in the world. Central banks and governments are trying to figure out, how do we adjust to this? The ones that have got the most to lose are economies like the US. The US is losing. If you want to raise finance today and everyone wants to do tokens, they are jumping and running away from Silicon Valley in order to raise finance. All of these, more and more of these assets, we invested in the Telegram ICO. Now, the crypto community were very skeptical about the Telegram ICO. The reason being is because they were raising $2 billion, which seemed like a lot of sell pressure if you're analyzing it from a traditional crypto ICO. But the reality is all of that $2 billion was institutional US dollars that needs a regulated way of actually exiting. The friction in exiting is so severe that I think that that's $2 billion that's going to stay in crypto. More and more large assets are now looking at how they can do tokenization. That pulls tons of US dollars, tons of Japanese yen, tons of Korean won into these exchanges, and the friction to get it back is so high that it tends to stay in crypto. So every single asset is now looking at jumping into this liquidity. Why? Because the original people that purchased those Bitcoins suddenly became the next wave of wealthy people. They wanted to invest in innovation and disruption and share it around. So they invested in Ethereum. Those that invested in Ethereum suddenly became mega wealthy on top of the Bitcoin that they had, and they wanted to share it and spread it around. And so then suddenly tokens came along, and then everyone started creating these tokens, and then the people that invested in Bitcoin and then Ethereum and then the tokens suddenly created this ginormous market capitalization and a ginormous increase of high net worth individuals that were willing to speculate and share this around. So all of these asset classes then started to come. I want some of those Bitcoins, I want some of those ETH, I want some of those tokens, and then I want to create my own token. So it wasn't enough investing in Bitcoin, they wanted to own the process, create their own tokens, and therefore that was their path to, and all of it, while you can say what you want about that, it's driving more and more and more fiat outside of the banking system into people owning their own assets. Now initially, they'll probably go by Coinbase, they'll probably go by an exchange, and they'll probably lose their money. But what they tend to do is, after having a bad experience, or after about a year, they start to learn about this thing called hardware wallets. They start to learn about how to own their own assets, and they don't tend to exit that much. That's why the market cap each year gets bigger and bigger and bigger. I believe that this is going to be the largest redistribution of wealth that we have seen in modern time. And not that it's going to solve all the world's problems, it might just do that. But what we're seeing is every time someone innovates on top of this technology, it pulls more fiat outside the traditional financial system and puts it into the token, crypto, Bitcoin, Ethereum, Bitcoin Cash ecosystem, whatever you want to call it. And today I believe it is one of the most exciting times to be alive in financial history. So I'm just going to go through, not sure if we can get my slide back. The final thing to look at is what's happening at the government level. Well, if you're a small island, if you're a US, you've got all these people leaving Silicon Valley because of the SEC regulations. You've got disruption in the IPO markets because all these traditional assets are now looking at doing tokenization and using Bitcoin and the friction global money coming around from everywhere because of the speed at which it can move. And then at the same time, you've got Wall Street disruption, you've got Silicon Valley disruption, and obviously the US dollar is the currency that has the most to lose if central banks start buying Bitcoin. Which central banks are buying Bitcoin? Well, if you're a small central bank that wants to mark your place in the world, I could not think of a better bet than putting some of that electricity that you're generating in your country and mining some of those newly created virgin Bitcoins. Or you could be, so more and more, I'm forecasting that more and more central banks are going to be getting into the mining industry. They're going to be allocating some of their country's electricity in order to do it on the central bank's balance sheet. They're also, if you are a central bank, and by the way, almost all of them, with the exception of a few countries like Hong Kong and Isle of Man, if you're insolvent, like most balance sheets are, with most central banks and most governments, technically almost insolvent, then I could not think of a better bet than what Bulgaria did. Bulgaria seized some Bitcoins. Now you could say that's, say what you want about that, but the point of the story is what I think is more important. They seized some Bitcoins of someone that they believe was a criminal doing things with that money. They look back at that hard drive about 3 years later and realize that the value on that hard drive was greater than their entire national debt. They're in surplus because of that trade. I think more and more small central banks are going to take that bet. They won't tell you that they're taking that bet. The Federal Reserve will never tell you if they're taking that bet. They're probably just holding them in case they get ransomed as a reserve. But the smaller central banks are going to do it. This is David beats Goliath. This is the countries, the forward-thinking countries' opportunity to take a speculative bet on whether this could suck out more and more money from the traditional financial system. The small countries are going to take that bet. But it looks like some of the larger economies, some of the more important economies, are all considering whether they want to take that bet. And the country that I see taking that bet more than any other country in the world is right here, right now, in Japan. And what is going to happen next is I believe there is still systemic risk in the financial system. Guess what? You still can't earn your own money. You still can't spend your money as you wish. And guess what? Nothing has been fixed since the financial crisis. Quantitative easing was a financial innovation to put more debt into the system that already had too much debt. All the other innovations that are coming through, investment banking, credit default swaps, mortgage-backed securities, they were all an innovation in order to pump up the economy, to get more debt into that economy. Nothing has been solved. There is still ginormous systemic risk in our financial system, and none of it has been fixed. So what are they going to do next? Well, every single central bank in the world has a blockchain innovation department, and they are all building their cryptocurrencies as we speak. Every single one of them. Why would they do that? Well, either they want to be cool because they're using the word blockchain, and that's the cool word to use in order to get some press release to your country, or they're preparing for a couple of things. The first thing they might be preparing for is to make your cash illegal. Every country in the world does not want cash. Cash is just something that they can't control, that they don't want their people to have. And so as cash becomes illegal in every country all around the world, and just like in China, they try and replace cash with WeChat Pay, I think every central bank is going to try and do the same thing. So when they want to make cash illegal, the way they're going to do it is with their blockchain fiat currency. The other thing that they're going to do is when the next banking systemic risk event happens, which is going to happen, it might be debt in Iceland, some obscure country. It might be student loans in Slovenia that takes down the whole system. It might be credit card default somewhere in the world that takes down the whole systemically risk interoperable financial system. Again, But what they're going to do is they're going to allow those banks to go bust. They're not going to say, they've implemented laws that allow them to bail in. They've implemented laws, the people will no longer allow them to bail out. Instead of a bailout, what they're going to do is they're going to say, right, JP Morgan, you're now allowed to go bust. Anyone that has an account with JP Morgan, come to the central bank and you'll have the equivalent balance of our fiat-backed cryptocurrency. You'll have it in your wallet. Now banks can go bust. This is central banks waging war on retail banks. Remember that digital currency that they gave the retail banks to create and they backed it all by debt? Well, now the central banks are probably going to get into issuing currency direct. They could replace one money supply with another money supply. And that money supply is what they're all creating right now. They're all preparing for that. And so you've got to ask yourself in the future where this market is going, what happens next? Well, when you can't have cash, when you can't spend cash, that means that all of your money is going to be digital. Now, the money that at a bank that you thought you owned, that they tell you how you can spend, that is based upon a very bad monetary policy, is actually better money than the money that you thought you owned that is going to be owned by the central bank. Because the central bank money, when you go to the wrong country, not only are they going to switch off your passport, they're going to switch off your wallet. Not only are they going to automate the tax collection that they think you owe, and then you have to prove that you don't owe, and then they're going to have algorithms and artificial intelligence on everything that you're doing on all of your money. And so what's that going to do? Well, I believe that fiat-backed cryptocurrency is actually important for one thing, stable spending. But people will hold the minimum amount possible in order to pay for their rent, pay for their goods in stable money. And more of it, as we get more and more reasons to exit the traditional financial system. The people in Cyprus did not know that Bitcoin was interesting until there was a bail-in. The people in Greece did not know that cryptocurrency was interesting until their banking system collapsed and they switched off their ATMs. The people in India did not know that cryptocurrency was interesting until they made large denominations of cash illegal, and people had to queue outside with their life savings in a bag, risking getting killed for their money because they needed to put it all through the banking system, and they lose their life savings because they didn't prepare or make enough notes for the Indian population. The people of Mexico did not know that cryptocurrency was interested until Donald Trump became president and started talking about what they're going to do with the Mexican relations and crash their digital currency called the Mexican peso. The people in England did not know that cryptocurrency was interesting until suddenly 25% value was lost as a result of Brexit because of EU uncertainty and what happens next. All Bitcoin needs to do from here is continue working, because the rest is going to stop working. All it needs to do is continue giving people an alternative and an option. All it needs to do is continue doing what it's doing, and it will become more and more useful to more and more people. And that probably leaves us into the debate, because okay, I'll leave that there, that's okay. Do you know why this isn't working? Can you get to the next slide? If you go to the next slide, maybe you can do it on the... Okay, well, we're working on that anyway. There we go. Leave it at the... I'm not going to cover this slide. I was talking about a little... as more and more people get into crypto, they always ask me, how do I get in? And I tell you, well, moving everything over to crypto is probably a very irresponsible thing to do, depending on your financial situation and where you can be. But what I often say to people, the way to get in is essentially take your income and take 10% if you can afford to lose it, and start to play around with this new thing. Do it through a regulated exchange, do your KYC, get into the crypto, and then eventually you'll figure out how to get it onto a hardware wallet, how to take care of your personal security, how to have a password manager, how to use two-factor authentication in order to learn the skills that you're going to need for personal security in the future. Once you've got that 10%, my thesis is that Bitcoin is the currency behind all that, and then you can take 10% of that and speculate as you wish. Try and accumulate more, depending on what happens with the regulations in Japan. I'm sure they're putting together a way for people to speculate with that, because there's a few cryptocurrencies I believe you can trade here at the moment. But then the one thing that I've learned is there's a few things that suck. If you want to make purchases and you have to live in a world of volatile cryptocurrency, you soon start to realize that when you try and buy a house with your cryptocurrency, or when you try and make a larger purchase, you soon start to realize that you are a currency speculator trying to figure out the best time in order to exchange that so you can make the purchase, or you're trying to go around the world and try and find someone that's willing to accept it, but even if they do accept it, they always price it in dollars, or they price it in Japanese yen, or they price it in renminbi. And so one thing I always encourage people to do is try and put 10% into some kind of fiat-backed crypto. It involves counterparty risk. It's the same as the banking system, but make sure that you've got some hedge there for the country that you actually live in as well. That's kind of a rule. So we're here in Japan today because we're looking to try and engage with more of the cryptocurrency community. We're not doing anything here at the moment, but we're looking to build a community because at BnkToTheFuture we're looking to do more and more as the regulations unfold in this time. So where this leads to, I think the debate now is, I think we're going to invite Roger up to the stage. And as I said, Roger has been involved in this industry since before me, one of the advocates for the industry, and we've reached a completely changing time in financial history in terms of the Bitcoin economy and the crypto economy. And I think we're going to have a discussion about where we go next.
Thank you, Simon.
Okay. So is someone actually moderating this, or are we doing this on our own?
So Simon and I have been friends for a long time, and I think we can handle it with the two of us.
Okay,
just fine. Does that work for you?
All right.
You want to state your position and then take as much time as you need, and we'll go from there if that works.
Yeah. Well, maybe you start with what happened to Bitcoin, where you think we're going next.
Sure, I'll gladly start. So for those that don't know, my name is Roger Veer. I'm the CEO of BnkToTheFuture.com, and as Simon mentioned, I was the first person in the entire world to start investing in Bitcoin-related startups. And at that time, there wasn't really a word cryptocurrency. It was only Bitcoin. And I've been giving a little speech about Bitcoin that I started giving 7.5 years ago, and that's that thanks to the invention of Bitcoin, you can now send and receive any amount of money with anyone, anywhere in the world, instantly, basically for free, and there's nothing that anybody can do to stop it. And that speech was very true about Bitcoin in 2011, 2012, 2013, 14, 15, and then somewhere in between 2016 or 17, it stopped being true about Bitcoin. But today, that same speech I've been giving for 7.5 years is still true about Bitcoin Cash. It's no longer true about Bitcoin Core. So last year in August, for those that aren't aware, there was one single Bitcoin, but it then split into two versions of Bitcoin, Bitcoin Cash and Bitcoin Core. And the developers behind the Bitcoin Core project today openly say that they want Bitcoin Core transactions to be slow, expensive, and unreliable, while the Bitcoin Cash developers want it to be fast, cheap, and reliable. The Bitcoin Core developers openly mock people who want to use Bitcoin Core as money. They don't think it should be used as a currency, whereas the Bitcoin Cash developers and the Bitcoin Cash community want Bitcoin to be usable as cash. And I actually have a really good demonstration, I think, here. Can I see, are there 3 people in the audience that don't have some Bitcoin Cash yet and would be interested in having some? And I see 1, 2, 3. So if you don't mind, maybe if I can invite you down to the stage here. And I brought in my pocket here what's called a paper wallet. And I'm hiding the secret key here. This is the public key. On this wallet, don't be shy, 1, 2, 3. And if I can ask you,
ビ
if
ット
you
コインキャッ
don't,
シュをまだ持ってない方、
うん
ビットコインキャッシュ、ペーパーウォレットでこれから申請されるということで、
so,
ビットコインキャッシュ持ってない方いらっしゃれば、
ビットコインキャッシュ欲しいの人には今からタダで出すだから、シャイにしないで。Okay.
はい、まだ持ってない方、今ないですか？すごいチャンスですよ。
Sure, Jimmy, do you have
持
Bitcoin
ってない
Cash
方
or not yet?
ジミーさん、
Jimmy's welcome. Yeah, I've known Jimmy for a long time as well. So I need you all to have, I think Bread Wallet will probably work. The BnkToTheFuture.com wallet will work for sure. So if you don't have the BnkToTheFuture.com wallet, maybe you can install it real quick from the App Store. And so while everyone's installing the BnkToTheFuture.com wallet here, I'll explain what's on this piece of paper here. So on this piece of paper, this is the public key. Hidden behind the fold here is the private key. That's all that's required in order to claim the money. On this wallet, there is exactly, as of an hour ago, $10 worth of Bitcoin Cash and $10 worth of Bitcoin Core. And what we're going to do is we're going to bounce it down the line here. We'll have the first person here scan it once he has the app installed. And we're looking for the BnkToTheFuture.com wallet. That's the one. So this one right here. The first one is an advertisement. The second one is the BnkToTheFuture.com wallet. And so what we'll do is we'll take the $10. They'll scan it from my paper. It'll go onto the first phone. He'll send it to the next person. And then finally, he'll send it to Jim, or maybe this young lady here as well. And what you're about to see is that we're starting off with $10 of both Bitcoin Cash and Bitcoin Core. By the time we get to the end of the line here, this young lady will wind up with $10 of Bitcoin Cash. And she'll wind up with 6, 7, 8, if she's really lucky, maybe $9 of Bitcoin Core, but I would guess it's going to be somewhere in the $7 range, I would guess. So just for moving it down the line here, we're going to lose 30% of the value. That's not a currency. That's not money. That's some sort of science project at this point. Whereas Bitcoin Cash still has all of the characteristics that made it the worldwide phenomenon that it is today. It still has all of the characteristics that made me fall in love with it back in 2011. It still has all of the characteristics that made Simon get excited about it back in 2011. So Bitcoin Cash today is Bitcoin. Bitcoin Core is something else. And so here he is, he's ready. Here's the private key, so go ahead and scan that. And I'll be the narrator here as we go. There we go. So you're going to hit Sweep Paper Wallet, and it's going to scan, and you can tell us how much money you see on both the Bitcoin Cash and Bitcoin Core address here. So we're starting with how much Bitcoin Cash?
0.10997.
There's US dollar value.
$9.91.
So and then how much Bitcoin Core?
10 point. Yep. Okay.
So we're actually starting out with less Bitcoin Cash because things are fluctuating a little bit. So we have $9.91 of Bitcoin Cash and $10.02 of Bitcoin Core. So go ahead and hit Sweep. And so it's sweeping the wallet. Let's try that one more time. Let's try the other button there. So, yeah. It said air querying the blockchain, so that's not the best demo, but here we go. There we go. So funds transferred of Bitcoin Core, and then hit OK here. And then you're going to actually have to scan it one more time, I think. There we go. So hit Sweep Paper Wallet. And so go ahead and hit Sweep. So we're just going to do the Bitcoin version here, and someone text Emil about the backend server there too. So, oh, there we go. Third time's the charm. So go ahead and hit OK. And now, do you have your wallet ready? So you're going to hit skip. You almost have it set up. You don't. The email's optional, so hit skip right here. Skip it, touch it, and then that one's okay. Hit the receive button. And so now you're going to go here and hit send. And then while we continue our discussion, hey Jake, can I have you come down here and help them guide sending the money on down the line? And when everyone's done sending the money, we'll make sure each of you get $10 at the end of this. So anyhow, we'll wait a moment or two as they bounce it on down the line. Some of them are installing the wallet for the first time. And Simon and I can talk about this a little bit more, but you're going to see we started out with less Bitcoin Cash at the beginning. I guarantee you by the time it gets to the end, there's going to be more Bitcoin Cash left by a significant amount, and there'll be much less Bitcoin Core. And so ask yourself, if you send money from just 3 or 4 people here in line, and suddenly by the time the end of the people get in line, yeah, you want to join us too? Don't be shy. If you wind up with about half of the money left, that's not a currency. And that's not what Bitcoin's all about. It's right there in the original white paper for Bitcoin, is that it's a peer-to-peer electronic cash system. If I take out a traditional dollar bill, hand this down the line. Hand that down the line if you don't mind. Take it and pass it down to the end, and let me know when it gets to the end. Keep passing. Okay. All of it still made it to the end. That's how Bitcoin Cash works today. Bitcoin Core no longer does. And I see you're sweating a little bit there, Simon, but I'll turn it over to you now.
Okay. So for those, I don't know the level of sophistication of everyone in the audience. I'm assuming it's a pretty sophisticated audience, but maybe some of you are new to this industry. Essentially, over the years, Roger was talking about the blocks were essentially you batch every transaction. I don't want to go into the geeky stuff, but you batch all the transactions that happen every 10 minutes. You put them into a block, and then if those blocks are full, it gets delayed for the next block, or there's this thing called a fee market, and you have to try and pay more in order to get it included in this block so that you can get a faster transaction.
Do you think that that's a good thing?
Well, it comes down to this 3-year debate that has been happening about how to actually scale Bitcoin. So if we could, sometimes it's quite hard to actually remember the history because so much happens. But the original thing was that I believe that this fee market was introduced as a way of trying to reduce spam transactions because there was unlimited demand for people trying to put more and more data and more things in these blocks. And then originally that was the purpose. Would you agree that was the purpose of the fee market?
Sure. So for the first 8 years of Bitcoin's history, transactions were basically free. They were either completely free or less than a penny. And then in maybe the last 2 years or so, a small group of people using censorship and propaganda and literally deleting anybody's post from these discussion forums online that didn't agree with them. They would literally delete the post. They changed the entire way Bitcoin worked. So the transactions, instead of being free or basically free, in December of last year, the average fee for a single Bitcoin transaction was $50, about 5,000 yen for one single Bitcoin transaction. So while Bitcoin transactions previously had been basically free, and Bitcoin grew into a worldwide phenomenon used by millions of people around the world, and with people excited about it all over the world, they veered away from that roadmap that had been incredibly successful and intentionally changed the Bitcoin network into something that was slow, expensive, and unreliable in an attempt to stop spam. But what we saw happen is it didn't just stop people from spamming the Bitcoin network, it stopped people from using it at all. And people who previously were using Bitcoin started using things like Ethereum and Dash and Zcash and Ripple and all sorts of competitors to Bitcoin that nobody paid any attention to at all until these people successfully, through censorship and propaganda, managed to change the entire economic formula for Bitcoin from something that used to be fast, cheap, and reliable to something that was slow, expensive, and unreliable. And that's the Bitcoin Core version that we have today. The Bitcoin Cash version that we have today has the exact same economic formula that made Bitcoin a worldwide success today. And we're going to see here in another moment just how different the two are. You're sweating a little bit more, Simon.
All right. So BTC was the version of Bitcoin that we've been talking about, and over time there was a disagreements about how to scale this network, how to get more and more transactions within blocks, and this is where probably a 3-year debate continues. Now, the bit that I really don't like, that I completely cannot support in any way, shape, or form, is that there was definitely some censorship and bias in that debate. So, you know, I'm not a Reddit user. I don't use Reddit, never have used Reddit. But on Reddit, there was lots and lots of, you know, anyone that disagreed with the path of how to get, you know, what I guess the core opinion at that time was getting their posts censored. And, you know, you gave a live example of that last time I saw you, where they put something on the Reddit post, and because it was talking about Bitcoin Cash, it got automatically deleted. So this is something that I think is that should certainly be condemned, and I'll publicly say that.
Thank you for that, Simon. A lot of the core supporters actually will not condemn the censorship. So I really want to thank you, Simon, for standing up for what's right there. And I guess I'll point out the censorship has been so bad that you literally cannot post a direct quote of Satoshi Nakamoto, the person who created Bitcoin. If you simply post his own words without any commentary whatsoever, they will delete your post to this very day.
Okay. So, you know, I'm not sure you seem to combine those as one issue, but, you know, I certainly the debate has been swayed through this censorship. I'm not sure who's doing that. I mean, what is it, Thymos or someone that does that? I'm not a Reddit user, so, you know, I'm not sure if that's 100% connected to the scaling debate.
It's not just Reddit. It's also BitcoinTalk.org, and it's also Bitcoin.org. So these are 3 of the most important websites in the entire cryptocurrency ecosystem. And if Bitcoin is supposed to be censorship-resistant money for the world, we shouldn't trust a bunch of people engaging in censorship to maintain Bitcoin as censorship-resistant money. And that's where Bitcoin Core's position is at this point, is a bunch of people that like censorship and are engaging in censorship are maintaining Bitcoin as censorship-resistant money. That doesn't make any sense whatsoever.
How do we know who's actually doing the censorship, though? Is it Core, or is it
Greg
people
Maxwell,
that support Core?
Greg Maxwell, the CTO of Blockstream, one of the faces of Core, I think we would agree, openly says that he supports the censorship. When I asked Adam Back to condemn the censorship, the best I could get out of him was something along the lines of, I kind of wish they wouldn't do that. But no, we should be standing up and shouting and saying, Bitcoin is about censorship-resistant money, and we should all be allowed to discuss this censorship-resistant money without censorship. And unfortunately, the people on the Bitcoin Core side, by and large, are not saying those things. They're either ignoring the censorship or turning a blind eye to it, or in the case of people like Greg Maxwell, they're openly supporting it.
Okay, well, I think we agree on the censorship issue. It shouldn't happen. It's definitely changed the course of Bitcoin, and the argument should have been an open debate, should have continued without censorship, and I think we agree on that issue.
And I guess I'd like to add one additional part to it. The vast, vast majority of Bitcoin users agreed with the roadmap of Bitcoin Cash. But thanks to the censorship of Bitcoin Core and the toxic environment that they created, all of these Bitcoin users left Bitcoin. They went to Ethereum, they went to Dash, they went to Zcash, and a bunch of them now have come to Bitcoin Cash, and lots of them are coming back. But that's been one of the biggest problems caused by the censorship of the Bitcoin Core community, is the brain drain upon Bitcoin. Ethereum and Vitalik Buterin would have built the entire project on top of Bitcoin had it not been from these toxic core developers engaging in censorship and personal attacks against anybody who didn't agree with them.
But is it the core developers?
Yes, it is.
The core developers are censoring those posts, or they're just not openly condemning it?
It's core developers and people that support the core roadmap, very clearly.
Okay. So if we can try and separate that between just an argument about where Bitcoin goes from here with Bitcoin and Bitcoin Cash. So I think it comes down to a debate about what people see as the most important user case for Bitcoin. Roger's,
So I have an update, if I may, on the progression here. The fees are so high on Bitcoin Core that this person is having a trouble even sending the remaining amount to this young lady's wallet.
He has to keep making the amount lower and lower.
And he's having to make the amount lower and lower. And he's using a wallet other than BnkToTheFuture.com wallet, which doesn't have a nice button to say send the maximum amount. So, but how much money do we have left there? Does it even say?
This is in bits right now. Okay, cool.
So we'll have an update there in a moment, since I think we have quite a few people.
Okay, so while we're doing that, the debate seems to have come to this: how to scale Bitcoin, what it is right now, and how to actually get to where they want it to be, or where people want it to be. So at the moment, there's no denying that anything that's not Bitcoin, most things that aren't Bitcoin, have cheaper transactions because they have less transactions in their blocks. They are less used. And that makes them cheaper by default, just as Bitcoin was when it was, when no one was really using it in those early days. As something becomes more and more popular, depending on the economics that you set up, if you allow these blocks to be full, then the fees of every transaction gets more expensive. As people stop using it or use it less, then the fees go down. They created this fee market, was where we originally started. Now,
So I disagree. The fee market is something that's very, very recent. Bitcoin grew from nothing into the worldwide phenomenon that it is today, having no fee market. And then a bunch of people came to Bitcoin much, much, much later and said, we need to change the underlying economic model of Bitcoin and introduce a fee market. And that fee market was just introduced very, very recently. And in the last year, we watched Bitcoin's market share amongst cryptocurrencies in terms of market cap go from 95% to about 35%. And that's as a direct result of changing the economic model of Bitcoin and making the transactions become slow, expensive, and unreliable due to this brand new fee market that was introduced by a bunch of people with very little to no economic or business background. Because if you think back to your university economics courses, there's something called substitute goods theory. And that's just a fancy way of saying that if you have two options for two things that do about the same thing, like Coke and Pepsi, or two different flavors of tea, if one costs less than the other, people will tend to use the one that costs less. And we've seen that happen with cryptocurrencies. There's 1,001 different cryptocurrencies that serve very similar functions. And for example, Bitcoin Cash, the fees are less than 1 yen. In fact, they're about 1/5 of a yen, gobun no ichi, in Tesuryo for Bitcoin Cash transaction. And on Bitcoin Core, the fees are maybe 50 yen at the moment or so, depending on what it was. And last year, it was around 5,000 yen per transaction. So you have two versions of Bitcoin, one that's incredibly expensive to use in fees, and the other that's basically free. You don't have to be an economics major to figure out which one of those two is going to be more popular, and that's very clearly going to be Bitcoin Cash. And I'd love to hear why you might disagree.
okay, so my belief is that BTC is a one-time freak innovation that won't happen again. I think it was created in a set of circumstances at a time that no one cared, and took years in order for people to actually start adopting it and gradually get more decentralized over time. So when Bitcoin was originally created, the same group of people were doing the mining, the same group of people were building wallets, the same group of people were doing development, the same group of people were doing everything, and gradually over time, it became more and more decentralized and distributed and different people doing that. That took a while for that to happen. That took quite a long time to happen. Now, what it actually ended up creating is, I still believe to this day, and Roger might disagree, the most decentralized thing we have ever seen, which is BTC. The reason that I say that is because BTC has pockets of centralization, but none of them control the ecosystem, which was proven by the scaling debate. The fact of the matter is that while we might complain that this Bitcoin Core, which is, as far as I understand, a group of 100 different developers. 40 of them are more active, and 3 of them are very, very vocal and very, very important. And the complaint was that 3 of those were all hired by the same company, which was a company called Blockstream. Some of those have left now as well, so there's 2 left as far as I know. And that's where they believe that that there is some kind of centralization within the development. But the development does not represent the entire ecosystem. The development is one part of the ecosystem, because the developers have to actually, in this, this group of 100 people, and there are competing. You can compete with this this implementation as well, but those 100 people all have completely different, wide and varied views. Now, over time, those that believed in bigger blocks, that wanted, and Gavin Andreessen and various other, Jeff Garzik, and Mike Hearn and various other developers, left the project because they decided, or some people talk about that they were forced to leave in some certain circumstances, which again, these needs investigating. But it tended to diverge upon a similar school of thought around that there will be unlimited demand for space on these blocks, and therefore you introduce a fee market to try and reduce spam was one of the things that they put through. And the second was they put together a group of technological changes that allowed off-chain innovation and scaling to happen. Now, this is speculative. I agree, this is speculative. They wanted to give it a shot about whether you could create this thing called the Lightning Network, and then rather than breaking the core BTC, which I know Roger's going to say it is broken, but it's still working.
Do you disagree that it's broken? It went from no fees, most transactions were completely free, to the average transaction fee. The average was $50 per transaction, and anybody running a business was paying more than $1,000 often for one single Bitcoin transaction. Is that not broken to you?
It's not broken. It eliminated a certain user case, which is lower value transactions. And lower value transactions is an important user case, but it did get eliminated as we scale, and the core developers are looking at implementing off-chain solutions to allow for infinitely faster transactions, cheaper transactions, but it's speculative. We're not sure if that's going to work yet.
And so we saw what happened by that speculative risk. They risked the entire Bitcoin ecosystem, and Bitcoin went from having 95% market share to 35% market share.
But I'm not sure that's all transaction fees. I think my personal belief is
not only transaction fees. Not only did it make the fees go high, but instead of the transactions being instant, in the end of last year, the average wait time was almost 10 days for a transaction to be confirmed on the Bitcoin network. So it went for your average confirmation from being 10 minutes to 10 days. Your fees went from being basically free to $50, and your wait to have your transaction confirmed went from 10 minutes to 10 days.
Is that the average or an extreme case?
In December last year, when the network was completely full, the average confirmation time on the Bitcoin Core network was 240 hours. That's about 10 days to get your transaction confirmed on the network. They completely broke the Bitcoin network, and we shouldn't be surprised at all that people started using things other than Bitcoin.
But this coincided with a time of record use, record adoption, record interest, record speculation,
that
when we weren't really ready for the scale.
That people like myself and Gavin Andreessen, the person that Satoshi Nakamoto turned over the Bitcoin project to, and people like Mike Hearn, who is the senior capacity planner for a little company called Google, so certainly someone who knows about capacity planning, we have been warning for years that we needed to prepare for people to be able to use Bitcoin around the world.
But the community wouldn't reach consensus on that. If the debate was going on and on and on.
The community didn't reach consensus because there was censorship of anybody advocating a particular opinion that wasn't in line with the core developers. So the consensus that was reached was one that was reached via censorship. So if you censor any dissenting opinion, you wind up with consensus, and that's what we have. And instead, all of the people that were being censored went and started using things like Bitcoin Cash. And that's why I'm giving the same speech today that I've been giving about Bitcoin for over 7 years. and it's about Bitcoin Cash today. Bitcoin Core became some sort of a science project for a bunch of people that are openly hostile to the idea of using Bitcoin as money. Whereas for me,
But they're not
Bitcoin is-
they're not openly hostile. I mean, they might have come
they
that way in order
mock
to
people
politically.
who use it
They
as money.
They might have reached that way in order to politically, because it's got very political, and people tend to be, pitching the things that they're trying to
So
get.
Simon, if you
But
think Bitcoin
they believe that there's a different path to getting to cheaper transactions and more scale.
and we've seen that their path failed. They went from
Well, it's not over
95%
yet.
market
It's
share
certainly not over. 95%
to
is
35%. It's not over yet. Let's continue on the same trajectory and see what happens. I
what-
don't think you have to be a rocket scientist to figure it out, Simon.
Well,
You're a smart guy.
yeah.
We went from 95% to 35% as soon as the blocks became full.
The 95%.
And you want to continue?
But yes, we did go from 95% to 35% and up where we are today. But I don't believe that was just because of transaction fees. It coincided with a series.
Horrible user experience that came along with it.
Not just a horrible user experience for microtransactions, but still you can do everything else apart from those smaller transactions without, that were taken away from that. But it coincided with, it's like, so when I was in the market, we used to have an index called the FTSE 100. And the FTSE 100 had another index called the Vodafone Domination, the Vodafone Dominance Index. And Vodafone was the most dominant stock within the FTSE 100. But what never changed about that is they didn't add 350 more stocks and 1,000 more stocks and then have this ginormous ICO bubble where it was creating more and more and more and more rich people that were speculating. They weren't spending these things. It was all speculation. It was rampant speculation. And all of those it was creating this ginormous amount of while you could call it competition, I don't think people were removing BTC in order to make a cheaper transaction. They were just trying to earn more BTC by speculating on other things, and then it goes back and forth, and it coincided with thousands and thousands of cryptocurrencies, people optimizing different user cases, people optimizing privacy, people optimizing cheaper, faster transactions, people optimizing smart contracts.
So I'm glad you mentioned privacy. That was another thing that was intentionally destroyed on the Bitcoin Core network by limiting the block size. People used to be able to use all sorts of privacy tools so Bitcoin could be used privately. That's no longer the case on Bitcoin Core because it became too expensive for anybody to afford to use any of those privacy tools. Whereas on Bitcoin Cash, all of those tools are now available again. And according to Ms. Fujimoto, I think we're about out of time. I'll give an update on our experiment here. Apparently there was a little bit of a language barrier because somebody along the line already had some Bitcoin. So when we got to the very end of the line, the Bitcoin Cash person still had exactly $10 worth of Bitcoin. It was in yen, but the person with Bitcoin Core had about almost $16 of Bitcoin Core because somebody along the line already had some money. But try this experiment at home with yourself. It's very, very clear. Bitcoin Cash transactions cost about 1/5 of a yen per transaction. Bitcoin Core transactions, depending on the day of the week, are somewhere between 20 yen and 200 yen in fees per transaction. And last year, when more people were still actually using Bitcoin, the fees got up to $50 per transaction on average. So anyhow, ask yourself, do you want the version of Bitcoin that's slow, expensive, and unreliable, Bitcoin Core, or the version of Bitcoin that's fast, cheap, and reliable, Bitcoin Cash? And it's not a tough decision, but I implore you all to think for yourselves. Thank you very much. Anything to add?
Let's do our closing because we could go. Is that your closing? Or?
That's my closing. Think for yourself.
Okay. All right. So what happened to me in 2017 is for the very first time in history we saw young people's path change. By that I mean that many young people they were never going to be investing, they were never going to be savers. They were going to university, they were taking on credit cards, they were taking on their student loans, then they were going to get their job, and then they were going to get a mortgage, and then they were going to contribute to this increasing money supply, and they were never ever going to save. They were never going to buy bonds, they were never going to buy stocks, they were never going to buy gold, and some of them might actually get on a different path. Now,
Can I ask what this has to do with Bitcoin Cash and Bitcoin
Sure,
Core?
I'll get to that. So BTC, what happened with cryptocurrency sector in general is while it was called speculation, call it whatever you want, But for the first time, young people started thinking about saving and investing. And saving and investing, this cryptocurrency industry, changed, I believe, is changing the path of many of those young people into a new trajectory, which isn't contributing to that economy that we were talking about. Now they could have their different flavors, and now there's unlimited options and unlimited things that they can think about. But I believe that where we are right now is not going to be one chain that does everything for everyone. I used to believe in that, but then the market, whatever happened, whatever the reasons that it happened,
The blocks
changed
became
that.
full, and people start building another chain.
But it does not change the fact that I still believe that BTC is a unique innovation that has lots of rooms for improvement, that has lots of innovation that's coming through, and has a different path of the fork that came from that. And if people are
Can I ask you a
optimizing
question?
for digital savings, and optimizing for digital cash, and optimizing for smart contracts, I believe it's up to entrepreneurs in the future to put together, with all these competing teams optimizing different things, applications that make it very easy for when you've got your Bitcoin and you need to get it somewhere else in a way that people want to receive it, the wallet, whatever, will just optimize, it will cross-chain, it will do things in the most optimal way. And I think that's the path that we're on right now. And what I would like to do, I will answer your question, I promise, is I believe that we are where we are. The censorship issue is a big thing. I'll support you on that, Roger. That is a problem, and there needs to be some accountability for that. But I do not want to see people deliberately trying to kill Bitcoin Cash in order to push Bitcoin Core, or Bitcoin, BTC trying to push BCH. I don't want to see the same. The two chains do not need to try and kill each other in order to succeed. And I think we've reached the stage right now where we should allow people to optimize their chains. There's too much hate in this community. We've forgotten who the true enemies are. We've forgotten that banks are the winners. The US dollars can be the winner out of all this thing. And we need to reach some more harmony. I don't know how we achieve that, but I feel that I personally believe that Bitcoin Cash existing keeps Bitcoin Core developers more honest. Having competing things is important innovation. And I think that we need to move to optimizations of different user cases and try and get back to more harmony, because when we have the next systemic risk event, we're going to suddenly realize that we weren't enemies with each other, and we need to move forward. Because my final comment, when I saw you on the Alex Jones show, Roger, I remember the presentations that you used to give, the presentations where inspiring the world to get into Bitcoin. And then when all of a sudden you go on Alex Jones and you're trying to explain to this completely new audience that might be using crypto for the very first time that Bitcoin's this thing that's going to change the world and all the things we believed in, and then at the same time, but it's got corrupted and therefore you should try and use this other thing, I think everyone just comes along and says, and then someone comes on and
They say Bitcoin
calls,
Cash is Bitcoin because it's the same speech I've been giving for 7 years, 7.5 years. It still completely applies to Bitcoin Cash. It's no longer true about Bitcoin Core. I didn't
But
change.
newbies
Bitcoin
cannot get
Core
that
changed.
message. Newbies
That's why
will
I'm
not
helping
get
spread
that
the
message.
message. Thank you, Simon.
Okay.
はい、ありがとうございました。